Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 small cap stocks with unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. Today we're taking a look at 3 small cap stocks. These are companies with market caps below $2 billion. And while these companies today range in size and sectors, one thing they have in common is that when it comes to analyst ratings, they've gotten nothing but buys. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found today's stocks over on the TipRanks Stock Screener. Found right at the top of the screener menu, we narrowed in on that small market cap sector here. I wanted some double-digit upside potential for price target and a strong buy consensus, not only from all analysts, but from the best analysts as well. And we got that by going into this ad filter section. That gave us our list of companies down below. You guys can check out the stock screener for yourself over on the TipRanks website or by downloading the TipRanks mobile app. Links to download are in the description down below, or you can scan the QR code on your screen. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these strong buy small cap stocks. Starting off with our smallest market cap and lowest price, we have SunOpta. Trading under the ticker STKL, they're currently priced at $7.29 with a market cap of $865 million. Overall, in the past year, the stock has gained 31% and in the last 3 months is up just over 12%. SunOpta is a multinational food company primarily focused on organic and non-GMO foods and beverages. They specialize in sourcing, processing, and packaging these products, offering a range of items including plant-based milks like soy, almond, and oat milk, as well as tea, broths, and fruit-based snacks. Their operations integrate from seed through to packaged products, emphasizing sustainability and health-conscious solutions. They're recognized for their commitment to organic and natural food products, aiming to improve lives through healthy and sustainable food solutions. On November 6th, they shared their third quarter earnings report, where earnings were in line with expectations, revenue beat, and looking forward, they did reaffirm their guidance. For their third quarter, they reported earnings per share of 2 cents, while revenue climbed 16% to $176 million, beating expectations by $3 million. Their adjusted EBITDA from continuing operations grew 13%, and the company reaffirmed their 2024 outlook. Just last week, SunOpta was included in Stephen's list of 2025's best ideas. Along with being included in that list of 21 stocks, right after their earnings report, Stevens also bumped up their price target on the stock, saying that the consistency of their results, coupled with their visibility into demand for existing customers into Q4 and the year ahead, should support a catalyst path for shares. SunOpta's unanimous strong buy rating is based on 5 current analysts, and their average price target for the stock comes in at $10.25, implying an upside potential of over 40%. Looking at those price targets down below, a lot of them all at that $10 mark. Our high-end price target is actually $12 from Craig Hallam for an upside of 65%, while our low end is $9 for an upside of 24%. The second small cap stock we're looking at is the Chef's Warehouse. They trade under the ticker CHEF, currently priced at $49 per share. The stock has climbed 68% in the past year and 23% in the last 3 months. Their market cap comes in at $1.94 billion. The Chef's Warehouse is a premier distributor of specialty foods across North America, with operations expanding into the Middle East and Canada. They distribute a broad portfolio of over 43,000 products, including specialty foods like artisan charcuterie and specialty cheeses, center-of-the-plate products like custom-cut beef and seafood, and broadline food products including cooking oils, butter, eggs, and milk. They serve a diverse clientele including menu-driven independent restaurants, fine dining establishments, country clubs, culinary schools, and cruise lines. On October 30th, they shared their third quarter earnings report, beating on earnings but a slight miss on revenue. For their third quarter, they reported earnings per share of 36 cents, beating expectations by 2 cents, while net sales increased 5.6% to $931.5 million, but that did fall $5 million short of analyst estimates. They did note an impact of a hurricane on their third quarter revenue growth and some soft demand in July due to seasonal international travel, but noted that their gross profit margin did improve by approximately 58 basis points, and they were seeing growth in their digital platform adoption. Over the past month, we have had several analysts increase their price target on the stock. More recently was one from BTIG, who bumped theirs up just on Wednesday. They believe restaurant operators will deliver a fairly upbeat tone at next week's ICR conference, as recent data indicates sale trends strengthened into the year-end despite the noise from Thanksgiving shift and tough comparisons. They add that the sector may see several pre-announcements, with Shake Shack and Chef's Warehouse potentially topping expectations. Other firms increasing their price target include BMO Capital, Jefferies, and Lake Street. And once again, we have 5 current analyst ratings, all coming in with a buy. Their average price target comes in at $58.20, implying an upside potential of nearly 19%. Looking at those ratings down below, once again, we have a fairly close group of price targets here. The low end would be $55 for an upside of 12%, while our high end is a couple at $60 for an upside of 22%. You guys know the drill. If you've made it all the way to our third stock, then this is a reminder to make sure you hit that thumbs up button. Last but not least, in fact, our highest price stock of the group is VSE Corp. They trade under the ticker VSEC, currently priced just above $91 per share with a market cap of $1.87 billion. This is one we touched on before back in June or July, I believe. Over the past year, they've climbed 56% overall. In the last 3 months, up just a couple percent as they've cooled off in recent weeks. VSE is a leading provider of aftermarket distribution and repair services. They operate through 2 key segments, with their aviation segment focusing on aftermarket parts distribution for various aviation sectors, including commercial, business, and cargo, as well as maintenance, repair, and overhaul services. They also have their fleet segment specializing in part distribution, engineering solutions, and supply chain management, managing supply chain logistics for fleet vehicles, including inventory, e-commerce, and just-in-time supply chain solutions. Their third quarter report came out on November 6, and not only did they have an earnings and revenue beat, they did increase their full-year guidance as well. Q3 earnings per share came in at 71 cents, beating expectations by 11 cents per share, and revenue came in at $273.6 million, growing over 18% and beating estimates by $2.7 million. The company had record revenue and record profitability for their aviation segment, achieving a revenue milestone of over $200 million. And along with increasing their full-year revenue growth guidance, they also announced the strategic acquisition of Kellstrom Aerospace. And this is another stock that had multiple analysts increasing their price targets following that report, including one from Truist. They said that strength in the aviation segment should persist into 2025 and likely 2026, with optionality for EBITDA margin upside. The ongoing Kellstrom integration activities, progression on new program ramp-ups, and improving execution will drive higher levels of free cash flow in the coming periods. And we have a bit of a theme going today, as once again we have a stock with 5 unanimous buy ratings. And that strong buy consensus comes with a price target of $135 for an upside potential of 47%. Looking at those price targets down below, we can see all those analysts bumping them up there. Our low end is $132 for an upside of 44%, while our high end is $140 for an upside of about 53%. So that is a quick look at 3 small cap stocks, all with unanimous buy ratings from Wall Street. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have an awesome weekend, and I'll see you back here next time.